Good morning, everyone, and welcome to the On Time, On Target morning brief. Coming to you from snowy Austin, Texas. That doesn't even sound right, but we did have the biggest snowfall we've had in a long time, at least since I've lived in Texas, yesterday. So it's kind of fun for everybody to get out and about. And school's canceled. That's kind of weird, even though nobody's going to school. School's still canceled for the few teachers basically that would have to go in. But it's an interesting day down here in Texas. So what are we going to talk about in our show today? We're going to talk about social media investing, and really why that's in play right now is because of the social media banning of President Trump from what happened last week. Is that right? Is that wrong? And how is it going to affect these different investments? Is what's what we're going to talk about this morning. So that's what we have for you in today's show. The Schwab platform's down for some reason. So can't call the long and short trades that I would normally have for you. But we'll keep an eye on a few things at the open. If you're catching us on replay, make sure you subscribe and hit the notification bells. And if you want to join us live, it's $25 a month. More information is available at OTOT now. So let's get started. All right, good morning. Welcome to January 11th, Monday morning. Standard, make sure you have your calls or your window set up for both your Q&A and your chat and your call sign selected. Standard disclaimer applies. This is a financial education presentation, so you have to do your own due diligence before acting upon anything you hear in this presentation. Full disclaimer information is available at ototnow.com. All right, our mission objectives today, we're going to grow our money, protect our money, and live off our money, specifically looking at growing our money through social media stock investing. When you think of names, that down below there, Facebook, Snap, Twitter, Google, Amazon, and the ETF social. I've been a long time Facebook fan. I've told you the story several times about getting in right after the IPO, how it went up, kind of crashed back down. That was a great entry point. I told you about selling it and then buying it right back like 6-7 years ago now. So it's been a long storied history with Facebook. The others are fairly new as far as Snap and Twitter. Generally avoid those unless clients want them, but we'll take a look at the Facebook chart today and see if it's right for you. Google and Amazon are caught up in this. Obviously, YouTube is with Google, and then Amazon and Parler. If you haven't heard of Parler, that means you're not a far right Republican, because if as a Republican, I get crushed with my far right friends saying, "Hey, we're leaving Facebook, going to Parler." It's like, well, I'm not. I'm far too centrist for that. But I know a bunch of people did, and that got shut down this weekend. So Amazon pulling that off of Amazon their servers. So we'll see. Overall, the futures are down. I don't think this theme is necessarily driving it. There's just general profit taking in play too, but a lot of good things to talk about. Also, question of the day is it's tax time, and we're also going to go into IRAs. Been talking about these nonstop last week. Make sure everybody's on the right IRA plan. So we're going to talk a little bit about what are the rules, how do they work. What are your options depending on your income level? We'll talk about that during the question of the day. All right, our flow this morning is going to be long, short, open, short, long. That means we're going to take a look around the world as to what the markets did this weekend. We're going to come back to the U.S., look at the headline review. We're going to take a look at those long-term investments that we have down there. Take a look on FinViz. We'll get into the short-term execution, and then we will get into question of the day. If you have any contingencies out there, go ahead and reach out to me through Steve at ototnow.com. All right, let's take a look at TD Ameritrade Think Pipes this morning and look about where we've been in the market. All right. There we go. Get that back open. All right, so basically, we've run up to this level. If you look at the far right, 381. Gosh, we were talking back at the election on whether it was going to drop down to that 320 to 300 level. Then we talked about maybe it's going to sell off into the end of the year. That hasn't happened, at all. So when you see a move down like today, we'll get to the futures here in a second, but generally, a 1% sell off or so, we could sell off 5, 8, 10%. For no reason other than people just taking profits. So don't read too much into the sell-offs. The world is not necessarily over just because the market is in the red. So I see a question there. Thank you. We'll get into that here in a second. Let's zoom in on the market a little bit on specifically, get SPY put in there. Again, S&P 500. So here's where we are. This is like last week, and then this is basically a 1% move down. So when you look at this, if we sold off a full 3% today, I'm not making that call. I'm just saying, even if we had pretty gross selling, we're going to go back to where we were on Tuesday. So, that's why you keep the big picture in perspective. The world is not over if things start selling off kind of hard. And then we'll go into the last chart. I'll show you. This is since we don't have anything on the Schwab platform to take a look at, Facebook, Snap are selling off hard, so that's why we have those pulled up. And then also Amazon has gapped down significantly from where it was. So we'll keep an eye on those short, probably not hopping in to take any of those short except for maybe Snapchat. And we'll pull up Twitter here too when we get back to it. There you can see Twitter selling off as well. They kind of started it. They were the first ones to ban Trump right away. So we'll get into whether they should or should not. All right, let's go ahead and take a look at the futures. Share out Google Chrome. There's the Schwab page I can't get into for some reason. Okay, here we are with the futures down 300. Let's go ahead and refresh this. Make sure that's good. Let me take a look at your comments real quick. Predator, LinkedIn, social media. I agree. I love LinkedIn. It's a little more professional in the business world. Yeah, I paid for the LinkedIn premium. Nothing. I got nothing I didn't already have. I can see who's looking at my profile. Well, I don't care. I'm not looking for a job. And I don't care who's following me or not, to be honest. So really nothing there to go. And then, are you concerned with tech companies becoming too big? That's a great question. We'll cover that once we get done around the world. So thank you for that question, Burner. It's certainly going to be a topic of conversation. All right, here we are pre-market. I've already refreshed that. Going around the world, EU in the red across the board, over 1%. So again, that kind of leads into how the US is opening because of their markets. Split over in Asia. There were our numbers Friday. Again, the big move up in tech is probably the storyline there. Bonds, remember, we followed this, every day for a year, and now it's up at 1.1. Some people say this is going right to 1.5. A lot of people are tying the increase in the 10-year to inflation. That's not a one-for-one tie at all, but people are doing it, and it's kind of like Bitcoin. If enough people believe, then in you go. Speaking of Bitcoin, we'll get to that in a second. Oil stable in the 40 to 60 range. Everything is fine in the oil land. Mixed in the gold and silver area, and then Bitcoin, kabam. So as soon as I start talking about it, it drops 13%. Well, if you're with me on the initial purchase, we got in at the 31,000 level. So we're still up, and I think that was like last Monday or Tuesday. But that's how quickly that's why you don't spend gains, right? You treat this as a long-term wealth building investing thing, and just because markets are up or Bitcoin's up, you don't go out and spend a bunch of money, right? Because it can crash right back down. So 13% this weekend. Do I think it's a buying opportunity? Yes. Been talking Bitcoin way too much lately, but we'll get back into that here in a second. All right, into the headlines. Refresh this and see what we have here. Okay, so there's your 170 billion in crypto sold off in 24 hours. So it's not just Bitcoin. So the better question is what Burner asked there is, are the tech companies too big? I don't think so. I think tech companies will run the world. They already kind of run the world, and I think they'll continue to run the world. Maybe not Tesla. It's the fifth biggest company in the world right now. But if you look at the broader thing of what Tesla stands for, of Elon Musk and going to Mars, and it does includes Solar City. It includes several things, right? So you have the the tech companies kind of taking over the world. Too big to me, the way you phrase your question is, are they a monopoly and are they gouging their consumers, the customers, right? And I would say no. Very much these companies are enabling things and bringing things to us that all of us willingly participate in. And there's really not being, a gouging, if you will, that's they're trying to make an inordinate amount of money. I mean, they make tons of money, but they do make it through advertising, really. When you think of your Amazons, your Googles, your Facebooks, not so much Apple. They have their products and services, but I think they're making the world a better place. And as long as, with the blue wave and the Biden administration coming in, I do think they will face a lot of criticism, and they'll have to answer a lot of questions. But I don't really see them getting broken up. If they do get broken up, they'll just simply have to spin things off. You could spin Amazon Web Services off of Amazon, and as a shareholder, you're going to get a piece of that company. From your way back in the day, like when we were kids, or when I was a kid, I should say, since we have some younger folks in the room, Ma Bell broke up. Did that hurt anybody? No, we all ended up with 8 different companies and they all skyrocketed. So from an investment perspective, it's like, dude, please break them up. That just means I have more pieces to grow independently. So I'm not too worried about it. There could be a day, right, where that is an issue, and I don't think that day is today. So good question there. All right, and then yep. How many Twitter followers do I have now? Not enough, right? I don't know offhand, but it's not a number. It's more of a number that would make you laugh than it would anything else. I'm sure less than 100, maybe less than 50. I don't know. I do put stuff out to Twitter almost every day. It's pretty lame as far as the heavy hitter content that's on there, but I do try to participate. So we shall see. All right, let's look at the headlines here today. You're going to hear impeachment talk, the calls for Trump to resign. I think that's a lot of posturing. I really think I don't think anything's going to happen. I know there's folks that are trying to get an impeachment on the books so he can't run again, which I didn't know. I mean, I guess that makes sense, but I heard that this weekend. So I don't know. We'll see, but you're going to hear a lot of talk of that. I think everybody's going to be wasting everybody's time. Let's just all collectively move on, I think, is the best thing for the country there. Here's the Twitter shares dropping first trading after the Trump ban. And then he tried to come out through a social media director and then got banned on that one. That was kind of funny. Lululemon, we shall see how they come out of the Christmas season. So Christmas season results are about to start released, and it's not really this week. Next week is when it starts in earnest. So a lot of the earnings that we can trade off of are going to come out. Parler's CEO says app will be offline longer than expected. I think it's dead. I think that's an optimistic CEO kind of comment. Longer than expected. Yeah, forever is longer. And then the stimulus check. Now that we have the blue wave, again, it's still kind of a recent development. So the $600 checks are going out. Or you've already got them, whatever, if you qualify. I do think that's almost a guarantee that there's another stimulus package that will come out late January, probably to the tune of $2 or $3 more million that are going to come out. And part of that will be bumping up the $600 check to $2,000. They may pick a different number because they're tying that 2000 is kind of tied to Trump, because as far as I know, he's the first one who said 2000. So they may just pick an arbitrary number off of 2000 so he doesn't get credit for it. But we'll see. So more stimulus coming out if you're in the group that qualifies for that. This is kind of scary. This is why we're here. Just 39,000 Americans could pay for $1,000 emergency expense. We often joke that I know some of the folks in there about our kids are richer than we are. I think both girls have that on hand where I it's funny. But yeah, a lot of people can't. So we're on the right side of the world here, that we're savers and investors and doing fine, when we realize there's a large portion of the population that is not in that same boat. All right, let's scroll over to FinViz. We're going to take a look at Facebook real quick. So here's kind of the Facebook sell-off going in since September. And again, they made a ton of money in investing. So, is it a buying point? No, I would probably say let the dust settle on this a little bit, because there's a lot of people that are spiking the football and leaving Facebook. Okay, every time some friend posts that, I'm like, okay, I don't even respond. That's a personal choice. I think there's more value than just political ranting on Facebook. I like the the long-term scrapbook mentality is what I use out there. And then let's take a look at Twitter. Twitter's run up significantly. It is down at the $47 range this morning. So 51 there, dropped down to 47. So it's about in this range as we scroll over for the market open. All right. I'm not anxious to short into anything into the market open here, so I'm not even going to call it, but we've got the SPY set up here on the left. We've got Twitter, Snap, and Amazon all going across the board here. Social over here, there's the opening bell. Social's the ETF. So again, there are some ETFs that we use out there. So we'll watch social. That would be the one if I was considering shorting. I think social might be your best option, but it's not moving. Doesn't look like it's open yet. So we'll keep an eye on that. All right, so you have Snap off a little bit because they aren't really caught up in this as much as Twitter. I don't know how far these names will fall. I really don't. And they may be done falling already. So social's not moving. So we'll get rid of that and go over to Facebook and watch it at the open here. So, Snap and Facebook barely down, not too much. And then you have Twitter down a lot. So I don't know. So when you think of revenue off of these platforms, and my kids are on these. I'm on most of these. I don't do much on Snapchat, but Twitter to me is still better news platform than it is a advertising platform. I know there are ads that run on there, but I don't think I've ever clicked on one. Facebook is a ad machine. It's kind of funny because I bought a jersey, an Austin FC jersey, which is our football club, our soccer jersey. And, I've been kind of against soccer my whole life, but now that we have a soccer team here in Austin, I bought a jersey. And the day after I bought a jersey, it was kind of funny during my CNBC is all, the big ads across CNBC were all Austin FC jerseys. It was kind of funny. But yeah, so all the targeted marketing that that Facebook brings you is pretty significant. So I think that's why Facebook has been a decent long-term hold, is from the advertising platform. And if you have a business, you can literally in an afternoon, you can register your business at the county, come back home, and without a website, most people are like, we got to have a website. Well, not really. I mean, I do for both my businesses. But you could get by just on a Facebook web business page. And now they have Facebook Marketplace. So you can actually sell, on time, on target t-shirts and coffee mugs right on your Facebook page. So it really brings everything to you. And then whenever you make a post, for those of you that happen to be out there doing this, when I make these posts in the morning, when I take these replays and put them out live, it asks me, it's like, do you want to boost this? And if you do, you can pay as little as like $5 and put your ad out in front of like 1,000 people. It turns your post into an ad and starts putting it out in people's news feeds. So even without really knowing anything about how to advertise, you can at least get your name out there. Where people click on it or not, you can log in and look at your analytics, and you're looking at a bunch of stuff that you don't really understand initially until you understand what impressions are and things like that. But it brings that to you and allows you to spend $5 to $10, which is, a small business advertising budget. I do have a campaign that I send out. I do a $350 a month, which has a lot of things with it, but part of it is a Facebook promotion. And I have a Facebook ad that runs within 5 miles of my house. Does it work? I will never know. I know some people click on it. I know some people see it and probably just scroll by. But name recognition, top of mind awareness, when you start thinking of that, Facebook really brings that to you. So very easy. Twitter, Snapchat, I don't really see it. TikTok's kind of interesting. One of my daughters put a post out on TikTok, a Harry Potter make a wand with me post. And she got 1 million views in like 24 hours. It was kind of crazy. And from that, she's able to now sell these wands on Etsy. So on TikTok, she makes a post of a wand. She puts it on there. She films herself making it. And then she does like a a little video and says, hey, if you're interested, go to my Etsy site and you can buy it. It's like, that's pretty easy for a piece of rolled up paper with some paint and some wax on it. I don't know, kind of crazy. Little entrepreneurs. I love it. And again, it's not necessarily about the money. It's more about the business experience you're getting as a teenager. Kind of crazy. And I know several folks that, that I have a couple of Round Rock high schoolers in here. And if you guys are doing anything as far as, doing any social media, selling, any of that stuff, just good on you. You are learning so much at a young age that a lot of people my age don't even know it exists. So, all right, I see some comments popping up. 17-year-old said he uses Twitter for tracking a bunch of people. Tracking kind of scares me. He's like he's a stalker. But I think you said he does follow me. So what's up? I won't call him out by name since we're on a public. But so Steve buys a soccer jersey, Bitcoin, and exceeds 100 Twitter followers. Yeah, they're nice. No, I won't be making any videos. I do get, since I have daughters, I get pulled into TikTok videos on occasion. Not, as a prop, if you will, but no dancing. Sorry there, Predator. You don't have to cash out of the market. But yeah, it's a different world out there. All right, let's get back to the investments here. So the market's still down almost 1%. Did have some positive news there. Twitter did sell off. So let's see. If we had shorted into Twitter at the 10% point, it would have been a 50-cent stop. Up in here, did have a dollar. Woo, right at it. It would have had a 3-hour move if you were going to stab in here pretty quick at Twitter on the short side. I wouldn't recommend that. Snap, I just don't see how Snap makes nearly enough money. Let's see what Facebook's selling off pretty hard as well. So these names are under pressure, certainly. And again, the real argument here, which I didn't talk to earlier, but really is the freedom of speech. What does Trump, just because he's president, now lose his freedom of speech rights? So there's going to be your kind of far right that, you're heavy Trump supporters anyway, but heavy, freedom of speech and keep my guns movement that is going to be anti these names. And then there's going to be the, other folks are out there that says, yeah, we don't need anybody online that is inciting violence, which is the card they're playing here. I kind of agree with that. But unfortunately, since I agree with that, or anybody that agrees with that, you get into the ethical problem of who decides. So now do we have our social media firms making that decision of what tweets and posts and things are inciting violence and who should get banned and who doesn't? Because if you take these major advertising platforms and they lean one way and they ban the other side, they're actually now swaying the country. And then it goes right back to what Berner was saying, are the tech firms too big? Well, if they're exerting political influence, then yes, that's not their role. If they're keeping us safe by squelching, people that are inciting violence, yeah, so the freedom of speech, you still can't say whatever you want, right? So anyhow, more to follow on this, but right now, I wouldn't buy any of the dips in any of these stocks. Facebook's probably the one that you might consider. No, just let it go. Market's kind of toppy anyway. If things start selling off, that's fine. We'll readdress later. All right, let's see what's going on. NIO up 10%. EV maker, I didn't catch any news there from NIO to see why specifically. Let's see, NVIDIA is up there. Kohl's, told you we're going to hold Kohl's until they release the results. They should have crushed Christmas. Hopefully that happened. Sony's another crushing Christmas name with PlayStation 5, which I still don't have. I suppose I could probably get one now. There's your GBTC. There's your Bitcoin selling off at 18%. So let's pull that chart real quick since we're on it. And if you're listening to me and you bought it, you're like, now you're mad. I was like, well, Steve's stupid because he said buy this. Well, let's take a look. Now, cage yourself. Even though this is an 18% move right here, if you rewind the clock, like I said, we're going back to Tuesday. Yeah, Tuesday is where this was. Do you buy the dip here? Honestly, I think you can buy the dip. If you're not in Bitcoin and you don't believe, don't touch it. But if you're starting to believe, then yeah, you can put an amount of money on this. If you're one of the younger folks out there, then this is something that's definitely worth buying into, just in case, right? In case all the crazy Bitcoiners are right, you want to participate. And again, I think that's taken, that's why Bitcoin's been on the rise. Is it's one of those. It was Pascal's wager about believing in God. If I might have just slaughtered that analogy or run a couple together, but I think it's accurate as far as, it's like, I'll believe in God because the penalty for being wrong, if there's no God and I believe in him, then there's not much penalty. But if there is a God and I don't believe him, the punishment is way too great. So it's same sort of mentality. If this thing does take off and becomes legit, it's been around for almost 2 decades now, but I mean, if it really is how we all transact around, international banking community in 10, 20 years, then yeah, you're going to wish you were in on this. So make your own decision, but I am in with some money, not a life-changing amount of money, even if it blows up, but I'm participating. So do what you want out there. All right, let's take a look at, come back to Chrome here and talk some IRA stuff and see if there's anything more in the chat. Yeah, the social dilemma. I absolutely. I think that's a great point, Predator. Everybody should watch that. Everybody. I don't care where you are on this issue, and I respect your opinion. You can be wherever you want on this issue because there's, it's kind of like abortion. There's no right and wrong. People think there's this huge, it's a black and white area. It's not. It's this terrible topic. Where everybody's somewhat right and somewhat wrong. Right? I think the social dilemma paints a specific picture for you to think about, and that's why I think it's attractive, is because it doesn't tell you, this is right or this is wrong, but it's saying, hey, if I remember right, all the creators of Facebook won't let their families on it or touch it. That's a pretty high conviction statement. So anyhow, I agree with Predator there. Definitely, that's worth a watch. Have your kids watch it and make their own decisions, right? Because they all participate on this thing. It is their generation's thing, right? The rest of us are, I feel like I'm playing catch up all the time on these things, even though I actively participate. But yeah, watch that. I think that's a good thought piece, if you will. All right, IRAs. So if you're working, you have to have earned income. You can open and fund an individual retirement account. Technically, it's funny because per the IRS code, it's actually called an individual retirement arrangement. It's kind of morphed into modern terms of individual retirement account, even though that's not its technical name. But if you are earning, you have earned income, then you can fund this up to $6,000 a year. If you're under 50, you can catch up to doing $7,000 a year if you are over 50. So I started when I was 16. Again, shout out to my parents for making me start this, because I didn't, I'm not going to know what that is necessarily, but they're like, do this, go get a job. We'll match the funds into the IRA. Free money is what I heard out of all those words. And then I kind of figured out what it was later as that money started to grow. So, you can do this even if you have a workplace 401k or a thrift savings plan or 457, depending on what industry you are in. But that's separate. So if you are, what should I do? Where should I get started? Well, if you're working for a company that gives a match, then meaning they give you free money, then do that up to the free money amount, right? Which is usually about 6% of your salary. So fund your 401k. If you have extra dollars, hopefully you do, because you live within your means, then you fund your individual retirement accounts. Back when I started, 1986, it was $2,000, which was a ton of money back then. And now it's up to 6,000. So I don't think it's moved for 2021, but those do increase every now and then for you to be able to put money away. You can do really 2 types. There's 4 listed there: traditional, Roth, SEP, and simple. The 2 that you need to worry about are traditional and Roth. If you contribute to a traditional, you have to qualify for the deduction, but whatever money you put in there, you're not taxed on. So if you make $50,000 a year and you put $5,000 into your IRA, that means you're only taxed on $45,000. So you save immediately on taxes with a traditional IRA. If you do a Roth IRA, you pay the taxes now, and then that money's never taxed again. There's some long-term benefits of that when you look at, when you think the traditional IRA. So use an example I just had, and then I'll close. I'm kind of long-winded today. But if you made $50,000 and you fund an IRA with 5,000, then you pay taxes on 45,000. But that $5,000, when you are looking at it growing and doubling and tripling and quadrupling over like 4 decades, right, where it's 8x what it was, well, you're taxed when you can start drawing out at 59 and a half. You have to start drawing out at age 72. But whenever you draw that money out, that money's taxed then. And the idea is you're in retirement when you draw that money, so you're not, that is now your income. So the tax rates will be lower. Caveat that with, will the tax rates be lower? I don't know. They're pretty low right now. We may never see this again in our lifetimes, because you're right, we have to pay for all this government stuff at some point. So with Roth, you are signing up for a known tax rate. You say, eat your vegetables first is what I call it, is pay the taxes now and let this money grow tax-free so you don't have to worry about it later. And mathematically, I can show you several scenarios that it's almost always better off doing the Roth IRA. The only time it's not is if you are now all of a sudden making millions in retirement, which what are you doing to make millions in retirement? But, then that's a good problem to have. Right? If you're pulling in a 7-figure income when you're 70, then oops, yes, you should have not done the Roth IRA. That's not a likely scenario, but could happen. But I say pay your taxes now, let that money grow tax-free, versus you are a complete unknown for 30, 40 years out, maybe more if you're younger, on what the tax rates are going to be later on. So anyhow, that's probably enough on that for today. There are income limits you have to make sure you're under. There are different strategies if you go over the income limits. If you make 200,000 or more a year, there's some strategies to do a backdoor IRA, but we don't need to get into that for everyone. All right, so I'm looking on another screen to see how the markets are doing. Well, we can go right to here and refresh this. So here's where we are. Market's actually up a little bit from where it opened. So trending higher. If you want, is today a day to go long vol? You probably could. It's already up 12%, but you could just go VXX long if you are looking for some thing. I don't see the market turning around and running higher before the inauguration, really. So got kind of a flat week, if you will, or flat to down week, in my opinion, coming up. So, all right, that's all I've got for you today. Make sure I've closed out the Q&A and the chat. Thanks for participating, by the way. I do I prefer that conversation than just me talking all the time. And with that, we will see you guys back here tomorrow.